Good morning, good afternoon, ladies and gentlemen, and welcome to session 4 of the African Mining Summit 2021 virtual edition. And this particular session looks at junior mining. This session will look at, in particular, political, economic and regulatory developments and why certain regions in Africa are succeeding and thriving in terms of the exploration and mining space and why others are not. And what makes junior mining projects an attractive investment, and what can we do to help stimulate exploration activity? My name is James Campbell. I'm Managing Director of Botswana Diamonds PLC, a London AIM and Botswana Stock Exchange listed diamond development company with projects in South Africa and Botswana and a joint venture in Zimbabwe. And some of you may have seen our recent announcement in collaboration with Vast Resources PLC to acquire Gem Diamonds' Gagu diamond mine in the central Kalahari. I'm delighted to be joined by four very eminent gentlemen in the junior mining space. Dr. Tony Harwood, who is the President and CEO of Montero Mining and Exploration Limited. Mr. Dalu Nkubi, Executive Chairman of Letaba El-Hishli Investments, Mr. Carl Espray, the Chief Executive Officer of Contango Holdings, and Mr. Nigel Forrester, all the way from Australia, the Chief Executive Officer of Mount Burgess Mining. So in order to get the ball rolling, I'm going to ask each of you to give a 2 or 3 minute kind of snapshot of yourself and your company, so the audience has an idea from which the context of your future answers will come from. So Tony, please could I start off with you?
Yeah, certainly. Good morning, good afternoon, everybody. Pleasure to be here, and thanks for the introduction, James. So, you know, I'm a geologist. Montero is an exploration company. We're TSX V listed. We listed in 2010. Largely exploring in Tanzania at that time. We were looking at rare earths, and then we also acquired some projects in South Africa, some phosphates, and then moved into Namibia, looking at lithium and tin projects. So myself, I've worked in Africa. I'm based in Johannesburg. I've worked in Africa since the 80s. Introducing many mining companies to different parts of Africa. I've worked for juniors and major companies. I'm also a director of East African Metals. We're busy in Ethiopia. So I've probably been to most of the countries in Africa. I've led exploration. I've been part of boards that have done exploration right through Africa. So I'm reasonably well placed, I think, to give a perspective from my experiences anyway. Thank you.
Thank you very much indeed, Tony. It's great to have an old African hand with us on the panel. Less of the old, I think. Dalu, could I hand over next to you? Could you please tell us a little bit about yourself and who you represent?
Thank you again for having us. So as introduced, my name is Dalu Ngube. I'm a mining engineer by background, and I lead a company called Letaba El-Hishli Investments. We basically a mining investment and advisory company, privately owned, so not listed like the other colleagues. The company is basically focused on co-investing or partnering in selected mining projects based on the skill set of the team. So we are founded by a team of technical and operationally skilled individuals, and we run on an owner-operator model, which is complemented by an entrepreneurial culture, also obviously leveraging on the size of the company. Our portfolio basically consists of operational projects in the precious metals and construction materials sector, and also professional services in terms of technical and management advisory. So we run within or operate within the realm of the junior space, but also in my particular experience, in my previous role in the corporate sector, I worked for a junior listed mining company. So I guess I come with first-hand experience of some of the challenges experienced by junior miners. Thank you.
No, great, Dalu. Thank you very much. And being a financier, I'm sure we'll all be looking at you at some point during the course of the conversation. Carl, over to yourself.
Thank you, James. Good afternoon. Good morning. Thank you for having me. Very good to be here. My background is more in finance, similar to Dalu. I used to work for BHP Billiton in their mergers and acquisitions department for many years. And after that, I ran a mining hedge fund in London. So we concentrated on investing across the global mining sector. And obviously a lot of that was concentrated in investing in the junior mining sector and Africa specifically. I am South African, so I grew up, most of my life was spent in South Africa. I'm now based in Europe. Contango Holdings briefly is a London-listed main board company that has coal assets in Zimbabwe that we are developing into a coal mine at the moment, and recently acquired gold exploration assets in Mali. And we've done 3 acquisitions in Mali, which we've accumulated into a small region with high prospectivity on the gold space. We're currently in the exploration program in Mali. We're currently doing our IP. And as I said, in the Zimbabwean side on the coal, we've got our 43-101 resource and our feasibility study. So we're in the process of construction. And coming from a large mining company into a small mining company has obviously been very interesting for me, and to see how things can get done differently, and specifically why things need to be done differently, because, and I'm sure we can talk about it later, the size of some of the larger companies and their ability to move quickly is really constrained by some of their protocols. Thank you.
Thank you very much indeed, Carl. That's a very interesting array of assets, from gold in Mali to coal in Zimbabwe. Nigel, concluding with yourself. Nigel from Mount Burgess.
Good evening, or good morning, good afternoon, everybody. Yes, I actually qualified as a chartered accountant, and I am a fellow of the Institute of Chartered Accountants in England and Wales, but I know Africa well. I was born and brought up in Kenya. What I did when we moved to Australia, I actually floated Mount Burgess Mining in 1985. And we were primarily involved in gold mining here in Western Australia. We discovered the great Red October gold deposit in the middle of Lake Carey once it was flooded. But anyway, after that, I decided that it was probably opportune to look at getting into Africa, primarily for exploration. I was about to say again, but that was for me personally. And we ended up by taking up a project in Namibia, a diamond exploration project in Namibia. And it was right on the border with Botswana. We did find 3 kimberlites. Unfortunately, they were not diamondiferous. We found lots of diamonds, lots of G10 garnets, but we never found the one that was giving us those 2 elements from diamondiferous kimberlites. But in that process of diamond exploration, we soon came to realize that in that same ground, there was part of a Neoproterozoic belt that spanned the border between Namibia and Botswana. This was just up at Chunkwi in Namibia. And so we then decided that being in a Neoproterozoic belt, it was obviously very prospective for base metals. So we decided that we would look at the Botswana side as well. We actually never found anything really significant on the Namibian side, but soon came to realize that all the fold closures for this Neoproterozoic belt were on the Botswana side. And we managed to pick that ground up, which had previously been explored by Billiton. And they had actually found 2, 3, possibly 4 good targets that we then drilled. And we are now trying to get into production 2 of those, the Kihabi project and the new project for base metals. And it's a polymetallic area where we've got zinc, lead, silver, vanadium, and we can produce vanadium pentoxide on site, germanium. And so we're looking at trying to get this whole situation into production. So that's where we're at.
Thank you very much indeed, Nigel. I've now got some what I find are very interesting questions, and I hope you do, and I certainly hope the audience does as well. And if I'm targeting one of the panelists, and another panelist would like to kind of add on something or make a comment, if they could just kind of put their hand up, not either this way or the technical way, then they could kind of add on. So I'm going to follow roughly the same order, so you know when you're coming on and when to expect the question. But as I said, please don't hesitate to put your hand up, and then I'll kind of allow you to kind of chip in at the end. Tony, yourself, having worked in Africa, and as you said, in probably most countries in Africa, possibly a bit of a contentious question to kick off with, and to all the panelists, which countries in Africa make the most sense from an exploration and mining investment perspective, as far as juniors are concerned, and why?
Yeah, good one. So you mentioned a number of things there. One is exploration, one is mining, and one is investment. So I think the first, in a sense, it's a no-brainer, but it depends on what kind of geologist you're talking to, or a miner or an investor. But if you're looking for gold, in my experience, you look at a map, where are all the gold mines in Africa? And find out they're in South Africa, they're in Ghana, there's quite a number in Burkina, in the Birimian, and Mali, maybe Senegal. You're looking at Tanzania, you're looking at Zimbabwe. So in a sense, it's sort of almost like the herd mentality. The simplest way to find deposits is to find out where all the other deposits are. So that's the first overlay, and it could be copper. You go to the copper belt. I mean, it's a world famous place, but that doesn't mean to say you don't find copper in Botswana or in Namibia. You do, and there's some mines there even in South Africa. But then you go to further flung places, and you go to Angola, you go to Morocco, where I've done lots of work in those places. So in a sense, it's quite simple, but in a sense, it's also in those jurisdictions, you're going to have a lot of competition. But in a sense, so it comes down to your expertise as a geologist and as a company and as a team. And you might have specialist expertise, specialist knowledge, whether you've got good relationships in the country, which might ease your time. But you're looking for a metal or a commodity, then look where all the others are, and you'll generally find all the majors or major companies there, and that's a positive in terms of a junior explorer. I'm coming from a junior explorer perspective rather than a junior miner. I'm looking for mines, but I'm exploring for mines. So I'm looking to, once I've found a mine or what looks like a mine, I'm looking to sell it to somebody, and the easiest place to sell a mine is to a company that's already operating in that jurisdiction. So that's a perspective. So yeah, you can find things, and that's the general rule of thumb. Not to say that you shouldn't, as an explorer, look elsewhere, but I'm looking at route one, and there are many other routes. And again, it depends on the expertise of the team, and that's not geologists; it's the admin people and the expertise in the country. The next overlay is investment. So so a junior company is usually looking for investment capital. So therefore, it has to attract. You got to go to the markets, or go to individuals or companies that provide investment capital, and they will look at your project and your opportunity, and then rank it, because it's all risk capital, and in exploration, it's probably the biggest risk of any kind of capital in the mining sector. Just in the sense that you're either going to make 100 times your money at one, or 1,000 times your money at one end of the spectrum, and that's what we're all looking for. But the other end of the spectrum, you could actually lose everything, lose all your money, and you need to move on. So and for an investment company or an individual you're looking for investment from a junior company, you need to you need to attract that investment, and that's not so. From an attraction of investment, you've got a great team, you're in a great geological area that's got lots of mines or lots of prospects, lots of excitement. But then the investor's also looking at, well, what's the chances of me losing my money? Tony, you've got a great team, great deposit here. It could be exploration, it could be at different stages, greenfields, it could have some drill holes or trenches or geochemistry or indicator minerals and so on. So then the investors say, well, you ticked all the technical boxes. Now let's have a look at what's the chances of this license that you have, or this option you have, falling apart. So effectively, you've got a great team, a great project, but wrong partner, wrong country, because maybe the country has got it's going to change legislation. It's going through insurrection or going through revolution or going through lots of different changes that countries do in a natural course of events. And I think you'll find on the map of Africa, some countries are more prone to doing this than others, and some countries are in the downward dip. And therefore that attracts it, but the opportunities are great. So in a country that's not looking very good in terms of its political situation, but that's the country you may find, there's opportunities there which could give you 1,000, 10,000 times your money. But then it's trying to find a route to make that real, and trying to attract the investment that's going to realize that value. So I think those are the, and there's, look at a map. I used to do talks of this in the 90s, and I think those, show me a map of Africa and show me where revolutions have occurred in the last 50 years. And it seems as if some of those countries are still having them, or have a, why has this country had three of these? Show me a country that's changed laws recently. Show me a country where they've had big scandals, or there are areas where either investors or mining groups have lost capital or lost their investment, or in court. So there's there are all those overlays, and you're talking about 50 odd countries in Africa. If you're new to Africa, then you need to analyze that, whether it's from an investment or exploration perspective. If you're not new to Africa, then you just have to look at that team. How good are that team? How good are you, James, in Botswana? How well do you know that country? If you have any problems, how are you going to overcome them? These are all questions that the investor will ask, and you're facing them, maybe or maybe not, and that's why you're in Botswana, which is a great country. So without being country specific, we can be country specific. Without being country specific, look at the macro, what the macro things are telling you, and then look at that team, and then look at how that team and its board. So the team's made up of obviously geologists, engineers, and administrative people. It's also got a board. You've got to look at that board and sort of say, well, if this company does go through a difficult time, then our members of that board got experience to be able to help them through that time. And it's easy to talk positively about the continent, and we can spend many hours doing that. And I'm not trying to dwell on the negatives, but the investor, or even the geologist, doesn't want to waste a lot of time in places where they're not going to realize a benefit of some sort.
Great, Tony.
Thank you.
Thank you very much indeed. If I can move now on to Dalu and Carl, and if you could particularly focus your answers with your financial hat on. Dalu, you partner with exploration and mining companies in Africa. Now, what do you look at when you look at partnering with a company from a country perspective?
Perhaps I'll start off by saying, James, our contributions in this panel will obviously be based mainly from a South African perspective, because all our investments currently really are all in South Africa. So whatever we'll be sort of sharing will be based on that perspective. But I believe some of these points might apply to other jurisdictions as well. But to answer your question directly, from a point of saying what do we look at, I think one of the major things for us, we believe in the all body detects principle. So the characteristics of the projects in terms of what is it sort of geologically speaking, how is it like, the characteristics in terms of the metallurgy. And then as a secondary measure, we would look at location and also if there's any synergistic fit with our current portfolio. Because we are a small company, and like I said earlier, we try and run on an entrepreneurial culture. We try to be agile, and therefore it's critical for us to ensure that whatever investment we make, we can also leverage on the existing portfolio. But the starting point for us is always the ore body. What is the project like from a geological point of view? Then, like I say, location becomes an aspect. Commodity-wise, we're not necessarily tied to any one particular commodity, but currently we strongly bias towards precious metals and the construction material sector. But we have looked at bulk commodities, for example, manganese, iron ore, and coal. Then the issue of team in terms of the skills, because we have got our in-house technical and operationally skilled individuals, the leader in terms of who is in charge of the projects that we look at does not necessarily become a constraining factor. I mean, we always believe that you can always find skills. We believe that if we find the right project in terms of the characteristics of the ore body, we can always match the skills to it. So skills, whether they are there or not there, it's always not a major issue, because we always find ways to work around that. And like I say, the other aspect obviously is whether there's a strategic fit within our current portfolio and also where we can exploit synergies.
Great, Dalu. Thank you very much indeed. Carl, over to yourself. Now, you mentioned in your introduction you had the gold projects in Mali and coal projects in Zimbabwe, two very, very different jurisdictions, two very different minerals. What do you particularly look at, aside from prospectivity, which I think that Anthony and Dalu have actually already commented on, because after all, if the geology is not right, there's no point going there. What other factors do you look at in terms of country selection when you're looking at a particular mineral, assuming that it's quite common in that particular country?
Yeah, I mean, it's a good question. What I look at, the junior mining sector needs funding, because by its very nature, money is raised and money is spent, and there's normally not any revenue because it's exploration of assets rather than exploitation of assets. And so I just look to de-risk the narrative to the investor base as quickly as possible. So that might be political risk within a country. Certainly, we've talked about de-risking the geological narrative. So that's proximity to other deposits, countries that are well known for that deposit. So if you leave the geology aside, de-risking the country risk is a very, very important issue. And actually, somehow, you start to see that different pools of capital tend to like different countries in Africa. So if one goes to West Africa, it's quite clear that the Canadian market likes the West African, because if you look at the number of companies that are gold companies in West Africa, they are predominantly listed in Canada, not in the UK. And in the UK, there's much more of an appetite for some of the Southern African countries, and it may be or colonial history or just historical reasons. So that's always in my mind when I'm looking at a country. Experience of myself and my board in countries. We've had some good experiences in African countries and terrible experiences in other African countries. And so, it's normally around the corporate and legal structure, understanding, what is the process to get a license? What are the rules around the exploration programs, and how likely is the country to take away that license from you? And in general, as a general rule, you can split Africa into French Africa and English Africa, and one has to be very au fait. I know there's obviously Portuguese Africa as well, but just as a general rule, one has to be very au fait with the legal differences between those two legal structures. We have both actually, so it makes life a little bit more complicated. But you know, that's very much in our mind when we're picking a jurisdiction.
Great, Carl. Thank you very much. And thank you very much for picking up on the language issue too as well. I think that so often we look at prospectivity and political risk, but sometimes don't look at the language enough, because you have to really speak it and understand it well to do business in countries which are non-English speaking. Nigel, you've been working in Botswana for many years, and why have you selected Botswana, aside from the geological reasons, and what makes Botswana so attractive to you?
Well, as I explained earlier, initially it was simply because there was a project there, which we recognized from a geological point of view. And then, as you're no doubt aware, over a number of years, Botswana has rated very highly in the selection of African countries. I mean, it's been dubbed as the Switzerland of Africa. So basically, we've taken that on, and we've stuck with it. The problem, and I think just about everyone previous to what I'm now talking about has mentioned this, the problem is that you, being a junior company, you've got to continue to be able to raise money to develop these projects. And so one of the issues is that you need to be able to convince the country which you're working in that, you know, this is what you've got to do and this is what they've got to understand. It's not just a matter of, oh, you've got a deposit, go mining. You know, it just takes a lot of time to get this thing into production. I think from an Australian point of view, it's more difficult than I think if, for instance, if we were listed on AIM. I think because, you know, in England with the ex-colonial attitude that people have, they know Africa a lot better. But in Australia, the problem is that, you know, you can have an uprising in Mali, and then all of a sudden people are saying, well, you know, what's going to happen to Botswana? You know, it's not one country, it is a continent. But this is the sort of attitude that, you know, that we are facing. And so these are the sorts of issues that you know, that you've got to deal with. The other thing, and I don't know whether it's necessarily only relevant to Australia, I don't believe it is, but I certainly know that it is very prolific in Australia. That is, 1 month you've got to be in gold, the next month you've got to be in lithium, the next month you've got to be in uranium, you know, because everything is fashionable on the market at any particular time. And you simply can't be there. So you've got to hang on to what you've got and develop the damn thing, and then hope that eventually, you know, you're going to be in that sexy margin, because it just changes so radically and so quickly. I mean, literally only a month ago, people were, it was gold, Nigel. Why aren't you in gold? Why aren't you gold? Go for gold. Then it died. And now it's coming back again. I mean, you know, and this is the thing. It changes so quickly, but you just simply have to ignore this and get on with what you've got to do. And then that depends on how well you can do that in the country in which you are operating. And I think from that point of view, some of my questions which will come up later on and which I put forward to you will probably cover that, and then I'll cover it then.
Great, Nigel. Thank you very much. And I'd like to just build on your last comments there, Nigel. If I could ask the panelists and if they could give me a brief response on that. Nigel posed a very good question, I think, in that as a junior, do you focus on your knitting, what you're doing, me being diamonds, for example, or do you actually focus on what is hot and what is sexy and what you can get money on? So if you could kind of, each of the panelists kind of spend a couple of minutes on this one, I think this will be most appreciated. Tony, what do you think a junior should be doing?
Making money for its shareholders. So that's a simple answer. And, you know, the only way we can do that is either by making our stock price go up or doing things which allow our stock price to go up, you know, finding things, exploring things and getting good results, or actually finding something and selling it. So we all know that you know, it takes time to find and develop any project. And you know, and I think you know, so timing is massively important, and we have all these cycles. So I put it down to what kind of expertise has this team got? What commodities are found in this particular jurisdiction? Because assuming you're in a jurisdiction, and you have to have at least a 2 or 3 year view on where you need to go, because that's the time that it takes to explore, drill, do the metallurgy, do your feasibility. It's going to take at least that, and that's assuming you have success. So and you know, in many commodities, and I've been in front of many analysts, and you know, why you're not in this commodity, why I mean that. Well, if you told me that 2 years ago, I could have done that. But this is my project. This is what we're doing. This is a great project. So this is what we're doing, and this is where we're going forward. You know, so ultimately, I think the answer is find yourself the best project you can and stick with it.
Great, thank you, Tony. Dalu, from your perspective, I know you're focused on South Africa, which is let's leave the politics to one side, but it's blessed with hugely variable geology. It's got virtually everything. So how do you deal with this sexiness versus being dogged and doing what you have to do?
Yeah, so I guess from our perspective, by one being a junior company, we believe that that should come with the characteristics of being agile. And as such, we would look at how flexible are you to be opportunistic when, to use the term, the flavor of the month or new opportunities come up. So we're not tied to one commodity, and therefore we believe that the target companies that we look at should have the agility to invest in opportunities that arise at the right time. So they should be able to exploit those opportunities. Otherwise, then the characteristics of them being junior or entrepreneurial don't apply if they are not able to react quickly. Then linked to that is back again to the point of, as long as the deposit shows value creation opportunity, we believe the skills can always be found. And I think we're blessed in South Africa to have quite a diverse set of level of technical and operational skills. So that doesn't become a constraining factor for us. So as long as the company shows the agility to react, and we believe that they are reacting towards a commodity that is probably hot during that time, then we'll match the right skills to that.
Great, Dalu, thank you very much. And Carl, from your perspective, from the Northern Hemisphere, how do you deal with these trends on the one hand, and then the business of actually doing the work, which takes a lot longer than the trends happen over time?
Yeah, I think that's the good point. The process of obtaining licenses, doing the work that's needed to understand the prospectivity of a license is so long compared to the kind of trendiness of a different commodity within the world, as I think Anthony, or was it Nigel, was saying earlier. Things, 1 week it's lithium, 2 months later it's gold. So I just tend to monitor what the market likes, and if we have something, and if I see something around that is, if there's a long-term sustainable trend, like whether it's EV for lithium or manganese for EVs, or some sort of a coking coal, we tend to keep half an eye on it, but we don't change the strategy of the company every 2 months. So it doesn't really affect us as much as, you know, if there's something that's really good and there's lots of money available and lots of investor appetite for it for an extended period of time, we might see if we can find a deposit that fits that within our kind of area of influence.
Great, thank you, Carl. And Nigel, now switching tack a little bit, is what do you think could be done to stimulate junior activity, whether it be exploration or mining in Africa? Do you have any thoughts on that?
Yes, I do. My principal thought is, and particularly when you're working in a country like Botswana, there are several funds in Botswana, as you well know. And what I have been suggesting over some time now, and when we've been able to attend to the Botswana Resources conferences, I think it is something which the government of Botswana should seriously think about. And that is that they should insist on the institutions of Botswana investing in their own projects. And every time I bring this up with various funds, I get told, well, you know, we can't afford this, and we tried this and it didn't work, and so on and so forth. What I am saying, there is a much easier way of doing this. All they need to do is for the government to introduce not necessarily a law, but a recommendation where they say each fund should contribute, even if it's 1/10 of 1% of their funds, into a national resource development fund. That national resource development fund is not going to be something which is going to be really hit hard on individual or single institutions. It is a national fund which is contributed by little bit by all of those institutions, but it is then a national development fund which can then invest in projects in their country so that they can then help develop those projects at a fastest pace. But not only that, what it also does is it then allows that government to understand some of the problems that some of those companies are facing in operating in those countries, because they are involved, they have invested in it, they have got equity in that project. And if there are problems that need to be resolved, then those problems can be addressed much more directly by the government because they have got an investment in that project.
Thank you, Nigel. Now, I'd like to kind of carry on with that line of questioning to my other three colleagues on the panel. Tony, how do you deal with the issue that 99%, or whatever the number happens to be, but it can't be too far away from that, of the money for juniors going into exploration and development comes from the three major jurisdictions, Canada, the UK, and Australia. And how do you marry that with, you know, funding within in-country itself?
You know, it's some of the countries in Africa do. In fact, Botswana is one of them, and it's obviously South Africa. They do have funding agencies, and you know, some countries, particularly in West Africa, and now we're seeing in East Africa, governments want to be partners, and so you know that provides some sort of stability and some sort of investment. But it's quite difficult for, you know, the marrying of that type of. But we have to overcome it. It's our job, you know. So and certain countries have you know, they hit the headlines, and other countries around them are put in the same category. So a lot of this is us at conferences and events like this, and outside, just telling the positive stories of exploration in Africa. But it is difficult. You know, I've been on the board or chairman or director of a company, and in quite a few companies, and you know, suddenly a minister has said, or somebody in government said, look, we're thinking about nationalization, and stock prices go down, and everybody starts getting pretty upset. And it was necessary in context, or maybe it was, but it certainly has a massive effect on our investment.
Tony, thank you. Dalu, I'm going to be a bit more pointed, if you don't mind, with this particular question with yourself, seeing that, you know, you are mostly focused on in South Africa. Right. And the context I would like to give before I leap into the question is that in South Africa, we've got the whole Black economic empowerment environment. We all know where that comes from, but it's the law. So let's just stick with that.
Yeah.
It's the law.
Yeah.
In Botswana, there isn't any. You know, there isn't anything at all. So my chairman has got a lovely expression. He says, a dollar is an orphan. It'll go to where it gets its best return. It doesn't care about things like that. How are you able to deal with this issue around local economic empowerment? And in South Africa, it's obviously BEE. In other countries, they have their own things against countries which actually don't have that and allow any form of investment and therefore will allow the shareholders to get their kind of return. How do you deal with that kind of dynamic?
Well, obviously it is a challenge, I think, especially at exploration stage. I think there was a comment from one of the panelists to say, at exploration stage, it's really high level at risk capital, it's like gambling money. But I think having said that, I believe that from a South African perspective, the current sort of discussions and work that is recently been sort of announced from a government perspective and from a funding perspective is seemingly addressing that. I mean, to give an example, as recent, I think as last month or a few weeks ago, there's been talk again of reviving the previous idea of having an exploration fund. I think the IDC was sort of talking around those kind of aspects. And we strongly believe that the conversations that are happening now are leading towards addressing some of those questions. I mean, if say there is indeed a dedicated exploration fund, that would, I think, to a large extent, address challenges faced by junior miners or junior explorers, while they are still at the low sort of high risk point of the curve in terms of spending at risk capital. But linked to that as well, we in various forums have also asked for consideration of, for example, a environmental rehab fund for junior miners, and specifically for junior miners from a perspective that sometimes you do find a good project, you do spend a bit of money, to define the resource. But one of the requirements, for example, for you to move to the next level is to have some form of guarantee to deal with the environmental rehabilitation. So basically what I'm saying is, as an add-on to some of the discussions, or as maybe a subset of that exploration fund that is currently being discussed, there could perhaps be some environmental rehab fund to assist the juniors. But I think overall, yes, it has been some challenges in terms of getting money for juniors within the South African sector, but the current discussions from both the government perspective and some of the development finance institutions are leading towards some form of sort of progress in terms of addressing that.
Great, thank you, Dal. If I could just make one quick comment before I go to Carl, to build on what Nigel was saying too as well. One of the things that I've been strongly advocating both in Botswana and South Africa is less state funding, because I'm a great fan of small government, I've got to be honest there, but more giving individual investors tax incentives to invest in companies such as ourselves, because people like us and our colleagues will be, I think, a lot more wiser with our own money. And if we're allowed to make a major tax write-off like they do in Canada around the flow-through share schemes, I think that will do a considerable amount, particularly seeing the abundance, actually, of high net worth individuals in both South Africa and in Botswana. Anyway, it's much less about me. Carl, from your perspective, how do you deal with this issue around funding mostly coming from the UK, I imagine, for your projects, and limited local funding?
It's a good question. To your point earlier, there are a lot of high net worth South Africans, Botswanans, Kenyans, and they tend to invest in the UK. So there is actually some local money coming from the likes of the South African high net worth, Kenyan, Botswanans, but it's all done. It's all done through the UK or Canadian or Australian listed shares. Within Africa, there's a few exchanges that are, I guess, sophisticated enough to actually raise money from. I've listed a company in Kenya before, and that was a very easy process. Obviously, the South African stock exchange is very easy to deal with. But for some reason, and maybe it's just the infrastructure around brokers, the infrastructure around the research analysts, even South African promoters looking to raise money from largely South African high net worths would do it on the AIM market in London or on the ASX or the TSX. So, it's easy for me. When I roadshow companies, I roadshow them even through South Africa, but in the end, it's just that the shares are traded in London. I will say one thing, that the JSE is really reaching out to the likes of me, and I'm certainly to the likes of, I'm sure, of the other panelists on this call, to try and get secondary listings into South Africa. And they're making that process very easy, as provided you've been on a qualifying exchange, I think for 18 months. It's like a 7 or 8 day cross-listing process. So I think maybe they're starting to see that they want to attract some capital into the junior mining sector.
Great, thank you very much indeed, Carl. We've probably got about 10 minutes or so to go, and if I could ask, each of the panelists to give us an assessment of what they've, what COVID has done to them, what they see as opportunities within the kind of post or current COVID regime for the junior mining sector. 2 or 3 minutes each, please. Nigel, firstly with yourself.
Well, I mean, obviously it's had an impact. And as I said earlier, well, probably not to the panel, but I'm not allowed out of Botswana. I'm not allowed out of Australia to go into Botswana. So, we're fortunate. We are fortunate in the fact that we have some very, very capable and reliable people in Botswana who can run with the project without me necessarily having to be there, or a mining engineer or a metallurgist or geologist or whatever. But yes, it has had an impact, and as you're no doubt aware, there were all the internal borders which you had to get permits to cross from one to another. But now a lot of that's been relaxed, because Botswana sees it as something which, the mining industry is such a vital industry to them, that has been relaxed. But yeah, it has, because people, unless you're totally inoculated, it's going to restrict movement, and restricting movement restricts work, finish, and it costs you time.
Great, thank you, Nigel. Tony, how do you see the post-COVID world?
It's an exciting world, and what's exciting about it, I think, it's almost like everybody's been asleep for 12 or 18 months. So everybody's looking for a new story. Everybody in certainly the investment world is looking to invest. I think we're seeing, part of another bull market where commodities are in demand. There's a global catch up on exploration because mines are running out of resources and reserves. And there's a great demand, certainly with the battery revolution, the green revolution. We're seeing that, exacerbated perhaps with, the flooding, the hurricanes, the volcanoes, and so on that are occurring around the planet, and people are blaming that on the environment and our effect on it. So I see a boom, and maybe in most commodities, and those specialty ones like the battery metals, the rare earths, the copper. I think gold and silver and will always be there. Platinum will have its peak. You're probably seeing the diminishing of coal and so on, but that's not to say that, that's not going to happen in the next 30, 40 years. There's still big coal plants. So it's a great time for opportunity. It's also, if you've got a team in country, rather than having this fly in, fly out team situation, you're going to massively benefit from that. So if you've spent time developing a team in the country where your assets are, it's huge. If you're having to try and fly in people and fly in expertise, it's difficult. So for those groups in remote areas, it's quite difficult. Those groups in more established mine jurisdictions, it's a lot easier. So that's my takeaway.
Thank you, Tony. A slight South African wrinkle for this question for you, Dalu, that I live and work in South Africa too, as well as Botswana. South Africa sadly missed the last 2 commodity booms because of political issues. Let's just call it that. Tony's commented, and I, of course, would subscribe to that. They were on the verge of another commodity boom as kind of the world wakes up led by China.
Yeah.
How do you think South Africa is going to grasp this and not let this opportunity go by the wayside?
Thank you. And then perhaps if you can allow me just maybe to make one comment on the COVID impact as well. So from our perspective, I think we were fortunate in the sense, besides the general sort of effect that it had on most of us, and I think everyone now probably indirectly or indirectly have been affected. I think the most sort of impact was really just that initial month of heavy lockdown, which was partly of April last year. But post that, the mining sector was initially started at 50% and then ramped up to eventually 100%. So yes, there was an impact, but generally speaking, I don't think it was as significant because of the fact that post that initial heavy lockdown, we are allowed to restart. And in our position, we're even more fortunate because all our operations are surface mining operations. So the risk is relatively lower than, say, a deep level, labor-intensive underground mine. Now, coming to the opportunities, talking from a perspective of the two main areas that we're involved in terms of, firstly, the construction material sector, I think there's lots of opportunities that are going to come into that space, i.e. infrastructure development, projects that sort of got delayed during heavy lockdown last year in the later part of the year. So we believe that in that space, we're going to see a lot of activity and obviously demand for certain input materials that go into that industry. Then on the precious metal sector, I think to a large extent, if you look at some of the results of the platinum and gold mining companies, and to an extent, even the iron ore companies in the last few months, we have got mines in South Africa. They've been shooting the lights out mainly because of what happened in the second half of last year and the first half of calendar year this year. So I believe to a large extent, there has been some exploitation of the current boom within the precious metal sector and other metals such as the iron ore and manganese. And looking as well into the future, most of these companies are committing lots of capex for project development. So I think this time around, we might be more prepared as an industry from a general point of view.
Thank you very much indeed, Dalu. And Carl, how do you see the post-COVID world?
Well, the pre-COVID world, the kind of COVID world has been extremely difficult for some of the points that Anthony was making. Getting QPs into country, ordinarily the QPs come from outside of the country. Even off-takers, where there's largely Chinese off-takers were refusing to come to Africa for months at a time. So we're starting to see a lot of that clear up, and that's exciting for me. In terms of my views on commodity pricing, obviously we're all positive commodity prices because we're all junior miners, so we have to be positive. So I'll leave that to people that know more about commodities than me. But what I'm interested in is being able to move equipment, whether it's drills, whether it's getting our QPs in to sign off on documents, sending samples away to labs across in different countries for analysis. And all of that has been a nightmare for the last 12 months, and it's really loosening up now. So that's very positive, I think, for us being able to actually move ahead and do things. I mean, during COVID, during the COVID lockdowns, I listed 2 companies. So there was always an appetite for, one in Canada and one in London. So there was always an appetite for investment, but actually almost raising the money was easier than actually undertaking the underlying operations because there was such draconian lockdowns throughout most of Africa.
Great. Thank you very much indeed, Carl. And that leaves me to thank all of our panelists, Tony, Dalu, Carl, and Nigel. And thank you for participating in session 4, the junior mining section of the African Mining Summit 2021 virtual edition. Have a good day, folks.
Thank you.
Thank you very much.
Thank you.
Thank you.
Bye, everybody.